It's 11 o'clock right now. Good morning. Welcome to WSGVR Education Committee present you today's special class regarding reverse mortgage. We have a special speaker from the Institute. We have Crystal Mo. Welcome you, and we have our speaker, Robert Ross, will share with us very important information regarding how do you do the reverse mortgage for your clients, even for yourself, or how to get a listing for this kind of property potential clients for you to develop your market in this unprecedented time. So right now, I hand over the floor to you, Crystal. Thank you.
All right, thank you so much, Pauline. Welcome, everyone. Thank you so much for taking time out of your day today to come to our live stream. Just a couple housekeeping items before we begin. I'll be assisting Robert Ross today in this live stream, and during this live stream, we will be more than welcome to answer questions that you guys have. So throughout the live stream, if you have any questions, please go ahead and you can put in your question in the Zoom group chat. And at 11:30 and at 12 o'clock, we will have 2 rounds of answering the questions that have came in. So feel free to ask questions at any point, and then we'll answer them once at 11:30, and then we'll also answer them at 12 o'clock. Second, we have a PowerPoint for you guys, and I think some of you have received the PowerPoint, some of you might not have. Just in case you guys have not received the PowerPoint, you can please go ahead and leave your email in the chat. You can send it to me privately as well if you don't want anyone else to see it. And what we'll do is we'll send you the PowerPoint, but we'll also enter you into a $25 Amazon gift card raffle that we will do at the very end of this live stream at 12 o'clock. So once again, we'll be answering questions at any point. We'll be taking questions at any point, but we'll answer them at 11:30, 12 o'clock. And for those of you who just joined, if you guys want the PowerPoint sent to you, please go ahead. You can either privately or you can put it just in the group Zoom chat as is. And then we'll also enter you guys in to our $25 Amazon gift card raffle at the very end of this presentation. With that being said, Robert, would you like to go ahead and take the floor?
Absolutely. Thank you, Crystal, for all the announcements. And thank you, the board, for allowing us to have our live stream. We appreciate that. So my name is Robert Ross. I'm one of the co-founders of Reverse Mortgage Educators, and we provide education for pretty much all walks of life, but really focus on the real estate community, as we believe that this product is definitely something that you guys should have some knowledge about, and also, not more importantly than that, the reverse mortgage for purchase product, as we see more and more older homeowners listing their homes and then using this product to buy their next home. So we're going to talk about that, of course. We usually do this class in 3 hours. So we're going to do a very accelerated version of today's class. And some of this stuff may not be spoken about, but we do have after class materials that you guys can review to gather some of the information that we will be just kind of breezing over today. But for the most part, we're going to focus on the reverse purchase product. And then at the end of class, we're going to talk about some very efficient and inexpensive ways to find listings with these retired homeowners. So without further ado, let's begin. So again, I'm Robert Ross. I've been in the business for 15 years now. So I do these loans. I originate these loans day in and day out. So you're talking to somebody who is in the trenches, so to speak, you know, doing these loans, helping older homeowners either A, stay in the home they're living in, or B, help them get to a home that's more desirable for retirement needs. So let's go ahead and talk about today's topics. So today's topics, we're going to talk about obviously the basics of a reverse mortgage and how having the knowledge and also having the knowledge of the reverse purchase product can help your business. We're going to talk about some examples of how a reverse mortgage for purchase works. So we're going to talk about that. And then also, we also want to address what happens in the future with these loans. There's a lot of misconceptions out there about how the product works, how it functions over the lifetime of the borrower, what the end result, what happens at that point. So we're going to talk about that today. And then, of course, the most important part of today, aside from learning about the reverse mortgage, we want to give you some strategies to start finding these listings out there, because there was a study that the National Association of Realtors had ran. It was about a year or so ago, and they took a poll of houses that were sold, and the same homeowner that sold their home, they also repurchased a replacement home. And they took a poll over a year's period worth of those transactions. And what was interesting, what was revealed was that 54% of those listings of homeowners that repurchased another home for their replacement home were the ages of 55 and older. So that just shows you the chunk of the listings and repurchasing their primary residence is amongst that older demographic. So the key becomes, how do you get in front of them? How do you put yourself in a position to make sure when those listings come to light that you're the person they end up calling to get that listing? So we're going to talk about that today as well. All right, so let's talk about what is a reverse mortgage, and we'll do this in a very basic format, so that way if you guys ever get a question from a customer that's older and they're asking you about what is a reverse mortgage, how does it work, it's so complicated, I don't get it, you guys will have some sort of basic idea of that you can explain to them in layman's terms. Okay, so a reverse mortgage, for the most part, they're called HECMs. Now, you won't hear me use that term too much, but a HECM is an acronym, and it stands for Home Equity Conversion Mortgage. HECM is the actual acronym, and that is the FHA insured version of the reverse mortgage product. There are proprietary or non-FHA products out in the marketplace today. However, we'll be talking about the FHA product today because in most cases, this product is the best situation for most borrowers to get into as opposed to the private sector. Okay, so what I'll do is I'll just kind of give you an idea of what it feels like to have a reverse mortgage if you were living in your house and you had one in place on your home. So depending on how much you borrowed up front when you got the loan or how much you've taken over your lifetime and whatnot, there's a balance there that's present, right? So there's an ongoing balance. Let's say you get a reverse mortgage and you get qualified for $300,000 in a loan amount, and maybe you only need 200 of that up front to pay off any liens or mortgages that are on title. So we have to be the only lien on title. So we pay off your $200,000 mortgage. You qualified for 300, let's say, based on the value of the home and the age of the borrower. And so we pay that off. So right there on the bat, we basically have alleviated the customer of their monthly mortgage payment, right? So that's the first benefit that this thing can bring to a customer who would like to stay in their house, okay? So we pay off that mortgage, no monthly mortgage payments. Now there's another $100,000 they qualified for. Well, that money can be received in a couple different formats, which we'll talk about in a few bullets. But what I want to show you guys is that reverse mortgages do have monthly or optional monthly mortgage payments. So here's how it works. Let's say you got that $200,000 balance. You have $100,000 extra that you can pull from whenever you want later on. So month one comes and you get your first reverse mortgage statement. On that statement, it's going to show you what your balance is of $200,000. It's going to show you that $100,000 that you have extra that you can tap into whenever you want to. It's going to show you the costs for that month based on the balance, right? So you have a $200,000 balance, and let's say the costs for that month are $1,000, okay? That's interest and mortgage insurance going to HUD or FHA. If you do nothing and you just simply let the loan be a reverse mortgage, what'll happen is that $1,000 will defer to the balance. Therefore, next month, you're going to owe $201,000. So your balance went up by $1,000. What some people can do if they opt into is they can actually pay that $1,000 on that month. And what it'll do is the balance will stay where it's at and you won't defer anything. And then the next month, your balance will be exactly the same. The interest charges should be exactly the same. Everything should be the same. And if you pay that next month, well, the next month again, your balance will be the same. So the point I'm trying to illustrate here is that you don't have to get a reverse mortgage and let it just defer interest throughout your lifetime. You may want to control that. And some people do because they want to control how much equity is left in the home at the end of the loan, right? Or they want to start to pay down the balance. Or maybe this was the only loan that they qualified for because it's a little bit easier to qualify for in terms of income and credit on our loan. So maybe this was the loan that worked for them. They were able to get financing to get cash out or financing to buy their next home. So the point I want to drive home is that you don't have to let an FHA reverse mortgage just go and set course and that's it. You have the option of controlling what it does. And that's really the power of the loan that, doesn't really get conveyed in our industry too much. So I want to make sure you guys understand that at the end of the day, a reverse mortgage is just a loan on title with optional monthly mortgage payments. Now, do most people make payments on a reverse? No, most of them are trying to hang on to their Social Security income and not make a monthly mortgage payment and live in a house for the rest of their life, retirement free or comfortably rather. So even if a client never makes a payment on a reverse mortgage, they get to live in the house the rest of their life. So that's where the power of the loan really lies. So you can let the loan defer interest your entire life. So if you got a reverse mortgage at the age of 62, which is the entry level age of getting this loan, and you lived another 30 years, so let's say 92 or 95, well, that's a long time of never making a payment on a mortgage, and that balance could get pretty high at the end of the day. So the best part is, even if the market is crashing, we're in 2007, 8, issues with the real estate industry. No matter what, you get to live in that house the rest of your life, despite it being upside down or having all kinds of equity. No matter what, you're never required to make a payment, and they'll never get a call, or you can't go into foreclosure by not making a payment. There are other ways to get into foreclosure on a reverse, but just know that the comfort in the loan is that you never have to make a monthly mortgage payment for the rest of your life if you decide not to. Okay, pretty cool stuff, pretty powerful. In 2009, what was interesting was that the FHA HUD, they announced that, hey, we can start to do this loan on purchases, which I found pretty interesting. That year, I probably did maybe one reverse purchase since it was pretty new to the industry. The following year, maybe one or two. Fast forward to today, right? Today's market, I would say about 40% of my entire company's pipeline is reverse purchase. That's speaking to me in volumes right there. One is that this product's starting to become more top of mind with agents out there. So they know about this type of financing to buy a home, which is super cool. The consumers themselves are starting to get wind of this product, which is also very good. But having this product available for a purchase certainly open up a lot of avenues. Now, of course, you can do it on a refinance as well, where someone wants to stay in their home. But here's something that has happened in our industry over the last 10 years. We've had lots of changes in our industry, a ton. In 2017, we had a huge change in our industry where FHA and HUD said, look, we got to reduce how much we're lending due to the economics of the mortgage insurance fund that insures this product. So they did that. And what happened was they reduced our loan amounts by about 10 to 15% across all age brackets. Now, what that did was a lot of folks that were out there living in their home, planning on staying in that home for the rest of their life, maybe they were planning on getting a reverse mortgage at one point in time. And when they would call into us and say, hey, I want to do a reverse mortgage, I am 70 years old, let's say, and my house is worth $600,000 and I owe $400,000 on my loan. Can you pay that off, eliminate my monthly mortgage payment so I can live in my house comfortably the rest of my life? And I would say, yeah, we probably could have done that about 6 months ago in 2017. However, we had loan amount reductions, and now we can no longer pay off what you owe because the loan amount that I can give you is not large enough to extinguish your mortgage. So then the customer would be like, well, what do I do now? I'm in a situation where my Social Security income is not covering what my expenses are. I really plan on getting this reverse mortgage. What are my options? Well, unfortunately, not unfortunately rather, but you do have another option, which would be to list your home with a realtor, and whatever the net proceeds that you get out of the loan, you can use that as a down payment, maybe on a house that's $50,000 less in value, and we can put a reverse mortgage on that as purchase money. And you still obtain your goal, which is owning a house, having a roof over your head, without a monthly mortgage payment. And in most cases, the house ends up being a better situation anyhow, due to the fact that maybe they went down to a single story or a smaller home or in a better area. So, or even, more of a turnkey type of property. So that's really what's going on in our industry. So we're starting to see more and more purchase activity from all three of those reasons. Of course, there are people that still would love to stay in their home and do a refinance loan, but in some cases they can't qualify, or maybe that home that they're living in now is not the right situation for them. And having those discussions and planning for the future might turn into a listing for sure. So a couple cool things on that. Now, here's what's interesting. So getting financing when you're in retirement, like a regular 30-year fixed mortgage, a Fannie Mae or Freddie Mac loan of any kind of nature there, it's hard to get those loans. You have to have perfect income, great debt ratios, great credit, all these things, right? So even if you don't have perfect credit or you don't have the most income that you did when you were working, you can still get a reverse mortgages in most cases, okay? Now, our loans are easier in some aspects to qualify when it comes to income and credit. However, they can be tedious, okay? In other words, like if someone's got a sub 600 FICO score, I don't necessarily care about FICO scores. You could have a 350, 400, 500, doesn't matter to me. What I really want to focus in on is how was your credit history the last 24 months up to you doing this loan? And if you had some mortgage lates or some credit card lates and things like that, we can usually overcome those issues with the underwriter by explaining some sort of hardship that may have happened, and then some supporting documentation backing that up will clear that in underwriting. So our loan is a very makes sense situation. So just because you can't qualify for a regular loan doesn't mean you can't qualify for a reverse. Believe it or not, when you're in retirement and you have Social Security income and you have a hardship, those hardships could put you behind pretty quickly because you're living on a fixed income. And so the underwriters understand that, you know, a medical expense, a family expense, a housing, something could have thrown you out of whack, and therefore, you know, that could hurt your credit, and we can overcome those issues. So it's a really makes sense type of loan when it comes to credit and income, of course. So even though someone may not qualify for regular financing to buy a house or even to stay in their home and get cash out, the reverse may be the solution for them. Many clients have no intentions of selling their home, may end up needing this to sell their home and rebuy with a reverse purchase. And what I mean by that is we've dealt with many clients in the past where a customer is fighting hand and tooth to try to stay in their home, right? They're living in Social Security, they have no savings, they're fighting to stay in that home, they're making the mortgage payments, they're trying to stay on top of it. But at some point in time, they're going to make a decision that, hey, I have to sell this home and get to a better home that's going to be more suitable, either financially or even physically. So inserting yourselves in those conversations is going to be key over the next 15 years. And that's where the end part of class today, we're going to show you some ways to do that. So just know that there's many people in their homes right now that are older that are trying to stay in there and make it happen, but they're going to come to that conclusion at some point in time that they have to sell their home and buy another home. And in most cases, they're not netting enough equity from the house they're selling to go buy something all cash. And maybe they can't qualify for financing due to their credit or income situation. So the reverse mortgage for purchase will help fill that void and get them into that next home. So we want to make sure that you guys see those indicators so that way you guys can insert yourself there and get that listing and get them to that right home for retirement needs. Okay, let's talk really briefly about refinance, because you will get the questions from your customers. They want to know, hey, can I get a reverse mortgage on this house? How does it work? I've heard that reverse mortgages can pay me from the equity of my home, and those are all true statements. So I kind of want to give you just a holistic idea of how the product works. So in a refinance, let's go back to my original example. Someone wants to stay in their home. Maybe they owe $200,000 on a mortgage and they qualify for $300,000, right? So we pay off the $200,000 they owe, and right there, they eliminate their monthly mortgage payment, and then they have an additional $100,000 left over. That $100,000 is the money that they can receive in different types of fashions. One fashion is they can elect to have monthly installments sent to them from that $100,000 every single month to help out with their retirement needs. That's available both in what's called a 10-year payment, which is a predetermined payment based on life expectancy for the rest of their life, or they can do a term payment where it's a certain dollar amount for a certain duration of time. The other way is they can simply do a lump sum distribution at closing and also down the line if they want to. The other way to do this is they can hold the money in the form of a line of credit. That's usually the best option in most cases because a lot of times customers don't necessarily have a need for that cash right off the bat. And holding in the line of credit has got some good features. In other words, when you do that, you don't borrow the money, so therefore you're not being charged interest on it. That's great. So it saves on interest. Number two, you can pull that money out whenever you want to. So that's great. And you can do it as much as you want at any given time. Number three, when the money is sitting in the line of credit, it gets a growth rate. Now, it's not a return on investment. They're just unlocking more equity for you as the years go by that you can borrow from. So it increases your borrowability on that loan. Excuse me. So those are all great features. So, and of course, you can do a mixture of all those items. You can say, give me cash at closing. I want a monthly payment, and I also want to have a line of credit that I can draw from at my own discretion. That's the refinance product. So it's kind of want to give you guys a little holistic view on that. And again, some of these topics, I may be leaving some details out, but Crystal's going to share with you at the end of class today how we have some video tutorials that will fill in the rest of the blanks for you guys. And of course, you can use this loan either in a refinance or a purchase on a owner-occupied, keyword there. It has to be an owner-occupied property. In other words, you can't get a reverse mortgage and go buy an investment property. You can't get a reverse mortgage and go buy a second home. It's got to be the primary residence where you spend most of your time at. Of course, it could be an SFR. It could be a condo. If the condo complex or community is approved FHA, that's fantastic. If it's not, in some cases, we're able to obtain a single unit approval, which is a lot less time consuming and paperwork intensive to get that done through FHA. And of course, you can buy a 1 to 4 unit. That's kind of interesting because then you can buy a 1 to 4 unit, live in one of them and rent out 2 of the units. And then maybe the 4th unit goes to a family member or something like that. So cool things you can do with this product. So in the big reality of this loan, it pretty much can do anything that a regular mortgage can do. Except for one thing, we have the optional monthly mortgage payment, which certainly bodes well in retirement. Okay, Crystal, what's our time?
We're at 11:22 right now. Just to let everyone know, you guys are free to ask any questions in the Zoom group chat. All you have to do is just type it in, and then we'll address it at 11:30. And then if not, then we'll definitely address it at 12 o'clock. Also, you guys, if you guys want the PowerPoint, you please feel free to send in your email privately to me, and then we'll go ahead and get you that PowerPoint as well as put you in that $25 Amazon gift card giveaway. Just putting that out there. All right, back to you, Rob.
All right, thank you, Crystal. All right, so we got about 7 minutes to go on this slide, and then we'll take some questions. All right, so this is a first example here. This is your basic downsizing scenario. This is probably the most typical transaction that I see. The numbers you're about to see are obviously scalable. They can go up or down, but we use this because it typically covers most transactions I'm seeing. So this is based on a 73-year-old borrower. But remember, for an FHA HECM reverse mortgage, the youngest age to get one is 62 years old, okay? All right, so let's go through this real quick. Let's say you found a listing, and this customer is going to list their home for $850,000. And the reason why they're doing this is because there's a few reasons, actually. Let's say that maybe they're tired of making their monthly mortgage payment. Maybe it's eating up all their fixed Social Security income and pension, and they want to get rid of that out of their equation to have more retirement money. Maybe they're going to a smaller home because this house is too much of a burden to maintain. Maybe it's a second-story home, right, where the stairs are now becoming an issue in their older age. Look, I'm 46 years old. And I'm already over my stairs in my house, so I can't wait to get to a one-story one day. But that, you can think of any kind of reason why an older homeowner would want to sell, right? So let's say after the house sells, after the mortgage is paid off, the customer nets $400,000 in net proceeds. Now that's the money they have to work with to go buy their replacement home. So let's say you find them, after you sold their home for $850,000, you find them a downsized home of $600,000. Now, based on 73 years old, I'm going to say, look, you only have to put down $259,000 of the $400,000 you netted from the house you sold. And of course, I'm going to come up with the difference in a reverse mortgage that's going to be placed on the house they're buying as purchase money. So you take 341 plus 259, that tallies up to 600,000. And now they've got their home. What I like about this transaction already is that, number one, they didn't use all the net proceeds from the house they just sold. So this person may have been living on Social Security alone and not had any savings in the bank. Now they got $141,000 in cash in savings from the house they sold originally. And in addition to that, what I like is that they didn't generate a monthly mortgage payment. That was probably one of the main reasons why they were selling in the first place. So you could start to see how this paints a picture and how this will definitely help out a lot of older homeowners get to a home that's more suitable, have some leftover cash, and not generate a monthly mortgage payment, and now start to live a little bit stress-free in retirement. And they for sure deserve that, of course. Stress is not good to have in your older age, not good at any age for that matter. So getting rid of all those burdens is certainly going to help out. And of course, you guys were the person that helped them list their home and buy that replacement home. So that's got to be very gratifying as well. And of course, we do the reverse purchase, which helps them out too. So it's really a great transaction to be a part of. And you'll see more and more of these as the years go by. FICO scores in this transaction. Maybe they had a 400 FICO score. And maybe the reason why they had a 400 FICO score was because maybe they missed a couple mortgage payments in the last 24 months. And they had a reason why they missed it, and they had supporting documentation. So I don't care about their FICO. I just want to know, why were you late on your mortgage, or why were you late on your property taxes, or why were you late on those credit cards? And believe me, more times than not, the customer has a reason why they were late. And it's usually some sort of hardship that hurt them on an income level. Also, the fact that they have limited income. They're living on, $1,200, $1,300, $1,400 a month in Social Security, and they can still get this type of loan to qualify to buy a house is fantastic. When we qualify these loans, we're not looking at debt ratios. All we want to know is, do you have enough income to have some residual money left over every month to pay for your groceries and your gasoline and your car insurance and whatever else that's not on your credit report. We got to make sure you have enough money to cover any liabilities on your credit report. We got to make sure you have enough income to cover taxes and insurance, and also your utilities. And believe me, more times than not, these older homeowners do, and it makes sense. And even if they don't and they're short, there's other things that we can do to overcome a shortfall in income. So I don't want to give you guys necessarily the details on how to qualify somebody, because I've had agents in the past, or even, friends and whatnot, that have qualified somebody just based on a light conversation I may have had with them. And turns out they could have qualified because we're missing some component or some sort of bit of information that was not revealed in the beginning. So it's a case by case, and more times than not, we're overcoming any kind of shortfall in income to qualify. All right, so Crystal, that puts us right at 11:28. So we'll jump on some questions.
Yeah, absolutely. And guys, we're answering questions right now. Feel free to put in any more. We'll try to squeeze it in during this time frame. Great. So Brian has a question. If the reverse mortgage does not have monthly payments, why does the borrower still need to qualify with income? Don't we just need to verify the subject's property equity?
Okay. Let me see. Say that. Read me that one more time again. I couldn't pull up the questions here.
If the reverse mortgage does not have monthly payments, why does the borrower still need to qualify with income? Can't they just, verify how much the house is worth?
Oh, okay. I can see what you're thinking. So of course, when you get a reverse mortgage, whether it's a refinance or a purchase, there's still ongoing charges on the house, right? There's taxes, there's insurance, there's HOA fees, and you still have obligations on your credit report, car payments, credit cards, anything that's, a liability on your credit report. So we got to make sure, even despite you not having a monthly mortgage payment, that you can still pay those items. So we don't want to see anybody get into hot water with the reverse. So, and we're going to talk a little bit more about this in a few, because that was a big change in our industry. You never had to have income to qualify for a reverse mortgage. But as of 2015 and forward, you have to have some income to be able to handle all the other expenses after not having a monthly mortgage payment.
Okay, great. Thank you so much, Rob. Let's see. Next question here is from Nanette. She asks, what is the loan to value limit for reverse mortgage for purchases?
Okay, great question. Okay, so here's where it gets complicated. So every age is a different loan to value calculation, and it's all based on actuarial tables. So if you can imagine that, if you're younger, are we going to give you a bigger loan amount or a smaller loan amount? Well, the answer is a smaller one, because you're going to have a longer duration of living, deferring interest. So therefore, we want to make sure there's enough equity in the home to handle that. And also, obviously, appreciation is a factor, because the house will appreciate as well. FHA knows that. So I'll give you just a quick broad spectrum. 62 years old is about a 50% loan to value. A 95-year-old is about a 75% loan to value. And then every age in between literally is a different loan to value factor. And it's not like it's, linear. It's more of a sweeping situation. So that's why we developed a calculator app. Because if you ask me right now, Rob, what does a 77-year-old get on a $680,000 home? I could probably get you pretty close, because I've seen the numbers a lot, but I wouldn't be dead on. And I use an application that we've developed for realtors to be able to calculate that. We'll talk about that later on.
Okay, great. Thank you, Rob. Let's see. Last question for now from Frederick. He asked, what are the current mortgage rates on reverse mortgage loans?
Okay, great question. So we have two products out there. We have an annual adjustable, and we also have a fixed. Our annual adjustable is anywhere between 2.75% to about 3.5%. And then our fixed is about 3.6% to about 4.5%. Now, you're probably thinking, well, I would go with the fixed rate product. Well, it's actually, the fixed rate product is the least used product in our industry. Reason being is because it has higher interest rates, therefore our loan amounts are less on that product. When our rates are lower, the loan amount increases as well. So the fix is barely used. There are situations where it works very well, but I would say 80 to 85% of the time, the adjustable product works way better. It's more efficient, and it allows you to have those other features that we talked about originally, which are the line of credit feature and the monthly payments to you. The fixed is a lump sum of cash at closing. It's really a one-trick pony. I haven't done a fixed product probably in the last 6 months, I would say.
Okay, great. We don't have any questions right now, so we're free to move on. Just to let everyone know again that we're doing a $25 Amazon gift card giveaway. All you have to do to enter is just go ahead and privately send me your email so we can contact you afterwards if you are the winner. So $25 Amazon gift card giveaway at the end. Rob, let's keep going.
Okay. Here's a couple of bullets for you guys before you write an offer using this product. So the biggest one on this page is going to be pre-underwriting, okay? When it comes to listing a retired homeowner's current home and then representing them and buying the next home, it's so important that we do a good job up front and get them pre-approved. Now, what I mean by pre-approval is that I'm not necessarily just going to write a letter and say they're pre-approved and sign it and that's it. What I want to do is I really want to gather all applicable documentation, income, pull credit, really get a good understanding of the customer and set the loan up in a way that it's going to get through and actually get an underwriter's eyeballs on the file to really get that approval solid, as most solid as it possibly can be. Because at the end of the day, the last thing I want to see happen is I don't want to see an older homeowner get locked up in an escrow where the loan can't close. That would be detrimental. And we're dealing with retired homeowners here, so we have to really, work with them carefully and make sure they're taken care of, because this is our older demographic and they deserve every bit of detail and concentration we can for them, because they're great. They've been around. They've got us to this point in our country. We got to help them out, right? Of course. So pre-underwriting approval should be obtained as quickly as possible. And the way it usually works is when you guys identify the customer that wants to look at this option, I'm usually meeting with them, going over numbers, gathering documentation, and putting the file together to really start generating that pre-underwritten approval. Last, or not last, but the next bullet here. Before a customer can, or before we can order an appraisal on a purchase or a refinance, they have to go through reverse mortgage counseling. This is where they're going to arrange this counseling call. I'm going to give them a list of counseling agencies that they pick. They arrange it. It's over the phone. It's usually about $125 for the call. It lasts about an hour. They go through and make sure the customer understands how the reverse mortgage works and talks about all the different aspects of it. Make sure that we're doing our job properly and the customer understands. And they're also looking for any possible red flags of maybe the borrower may have some dementia or Alzheimer's. They want to make sure that the person understands the product and all that. So it's a good layer of protection between the lending industry and the consumer. So that needs to be done as soon as possible. I'm usually handling that before they even get an escrow on a purchase, because the first thing that happens once we get an accepted offer on an escrow is that the listing agent is then reaching out to me and asking, where's the appraisal at? And of course, I want to be able to order that right away so we can meet our escrow deadline. As of today, there can't be any seller or agent concessions. In other words, the seller can't just credit, $5,000 toward closing arbitrarily or for any matter, or the agent themselves can't, partake in giving them some of their commission. No seller or agent concessions at all. Kind of a weird rule. I disagree with it. I think that our older demographic should have concessions. As opposed to someone, let's say my age, buying a house. I mean, I'm still working. Why should I get concessions over a senior? It doesn't make sense to me. But it is what it is. Hopefully it changes in the future. And of course, this could also tie to personal property. If you have a washer and dryer, let's say, for example, that are coming along with their house and they're not really affixed to the house or built in any way, that could be considered personal property. Can it be left behind and go with the house? Of course it can. What I usually ask is that if there's value in the RPA or the purchase agreement, then write an addendum saying there's no value given to those personal items, and that'll make it through underwriting. So no personal items as well, unless there's no value given. Last but not least, when you do write an offer, in your forms that you have and where your RPAs are located, there's a document called an FHA mandatory escape clause. This needs to be included with your initial offer and must be signed by all parties. This is the same document that you use for regular FHA financing, so it transcends into our world as well for the FHA reverse mortgage, okay? And of course, if you have any questions before you write an offer or even list a customer's house that's looking at the reverse purchase, just get a hold of my company. You can call that 888 number there. That is a realtor specific line. Nobody calls on it but real estate agents. So when that thing rings, we know you guys are either working with a customer or you need some help immediately. So call us there. We'll be glad to get your questions answered and get you set up to make sure that that listing that you get and that buying opportunity is very smooth. That's the whole idea. Okay, this I'm just gonna kind of blow through really quick because you guys can take some time when you guys have the PowerPoint in front of you to read through this, but we got 10,000 boomers every day turning 65. That'll continue every day until 2030. We have 80 million boomers in the country. If you count the silent generation on top of that, that's somewhere right around 105 million people. Just about half of our boomers out there are underfunded in retirement. So there's not a lot of savings there. So what that means is a lot of our retired generation are living on Social Security alone. Now, this didn't happen overnight. Back in the day when when he retired and when his father retired, they got full pensions. Their income just continued right through retirement, like it never skipped a beat, right? But then the pensions got removed in the 80s. Now we have 401ks, and a lot of people had a hard time funding their 401ks, or the 401ks got a little beat up in the markets when they retired. So this caused a lot of havoc in the retirement sector. So pensions are a thing of the past for the most part, unless you work for a state or a government or some major big corporation. But for the most part, it usually self-directed, and 401ks are where they're at now. So hard to save when you're running a household. I know, I have kids, I have a house, I have expenses. So it's very hard to save. You have to do the best you can. Of course, but that's just the way it is. We have a lot of homeowners out there that are age 55 and older or 65 and older that have a ton of equity, you guys. Nationwide, I think there's over 7 trillion in homeowner equity out there amongst our retired generation. So the key becomes, if their wealth is built up in their home, that's where all their cash is at. How do they get to that cash? How do they access that safely? Well, one way is obviously a reverse mortgage. But like I said, a good chunk of folks are not going to be able to qualify for the reverse due to their mortgage balance, but they still have equity. So that's where you guys come in. You guys are going to help get those houses sold, get them into something more suitable with the equity they have. And in most cases, hopefully they're left with some equity left over, like the first example I shared with you, so they can also bring that into their overall retirement strategy. So lots of homeowner equity out there. Okay, let's talk about what happens in the future with the reverse mortgage. There's 2 likely outcomes. Either A, the house has equity above water, or B, the house has no equity or negative equity underwater. So here's how the above water example works. Let's say all borrowers on the reverse mortgage are now deceased. The heirs are now in position to figure out what they want to do with the property. And here's how it plays out, and here's their options. Let's say the homeowner, or the value of the home, is $600,000 after all borrowers have passed away, and our reverse mortgage balance at this point in time is $400,000. So there's $200,000 in equity there. If the heirs want to keep the house, they're more than welcome to do so. However, they do need to pay off the loan because the loan was made for the borrowers that are now deceased. So they would refinance, pay it off with cash, or a mixture of the two, keep the house and the equity. Very simple, very straightforward, just like a regular mortgage. If the heirs did not want to keep the property, they can sell it. They would simply sell the home, list it with a realtor, and whatever's left in equity after the loan's paid off and the purchase price of the home, that's their inheritance. They would take the equity and do whatever they want with that point in time. This also, number 2 example, also is available for the homeowner themselves. A reverse mortgage is not a final strategy or a final mortgage by any means. A homeowner can get a reverse mortgage and then 5 years later decide to sell that very same home that's got a reverse mortgage on it, pay off the reverse, take their equity, and go somewhere else. So in this example, if the homeowner decided to sell their home and move to another state or another part of California or wherever, they could sell the home, take their equity, and go buy something different. They can get another reverse mortgage, but you can only have one reverse mortgage at a time. So that's very straightforward. Sounds like a regular mortgage to me in that regard. Here's where the loan is a little different in an underwater situation. Let's say we have a home value of $300,000 and we have a balance of $400,000. As you can see here, we're $100,000 upside down, negative equity. If the heirs want to keep the home, they're more than welcome to do so. All they have to do, though, is pay off 95% of whatever the market value is, which will be determined by an appraiser. So if the appraiser appraised a home at $300,000 in this example, the balance of the loan to pay off would be 95% of 300, which would be $285. You're probably wondering, well, there's another $115,000 that's owed on the reverse mortgage. Now, what gets happened there, is that FHA, since this is insured by FHA, they pay an insurance claim to the lender for the loss, and the lender is made whole. And the borrowers get the house at 95% below market value. So that's available to the heirs or whoever's in charge of inheriting that property at that point in time. The other thing is, if the heirs are like, okay, well, we appreciate that 95 rule gesture, however, we're not going to take advantage of it. So what are our options? Well, they can simply walk away. It's FHA insured. FHA will deal with the house just like a regular foreclosure. So what'll happen is a notice of default will go out. The default is triggered because the homeowners are now deceased, and this is no longer their primary residence. So they would send out that notice of default, and then if nobody responds to the NOD, then it would be a notice of sale. If nobody responds to the notice of sale, then it goes to auction at the courthouse, and if nobody buys it at the courthouse, now the lender owns it, and it is an REO, real estate owned. And all the other houses that the deceased borrowers may have owned, or cash or assets, all untouchable. It's a non-recourse loan, and on top of that, California is a non-recourse state. So no harm going to come to the heirs, no weird 1099s for the loss, nothing like that. FHA will pay the claim to the lender, and everybody's made whole. And at the end of the day, the borrowers could walk away, no problem. The other thing is that if the heirs are like, we don't want to see the house go to foreclosure, maybe we should list it for short sale, and that is definitely an option. I heard the short sales go pretty similar to a regular mortgage short sale, so nothing really surprising there. So those are the options in an underwater situation. Okay, there's a lot of myths out there about this product. We'll go through these pretty quickly. I think most people understand these myths out there today, but let's just go through them really quickly. Of course, the government or bank does not own the property when you get a reverse mortgage. When I got in the industry 15 years ago, that came up on every conversation with every homeowner that I met, and that is not the case. The reverse mortgage is just a lien on title like any other lien out there. Well, any future appreciation in the home, can that be inherited by the heirs? Of course, yeah. If the house appreciates and there's all kinds of equity in the home when the borrowers pass away, of course they get that equity. Sell the house, pay off the reverse, whatever's left in equity is theirs. Can my home inherit the home, or can my heirs inherit the home after I pass away? Of course they can. The best way to inherit the home, obviously, with or without a reverse mortgage, is having it set up in a trust, so that way they can avoid probate and all the issues without having a trust. So, but yes, of course the heirs can inherit the home after you pass away. What happens if my house ends up being underwater? Well, all of a sudden FHA say, hey, your house is underwater. You got to get out of your house. No, that's the saving grace in the loan, is that despite the balance of the loan, despite the market conditions around you, you get to live in the home the rest of your life. But that doesn't mean there's no rules attached to that, right? There's got to be rules that you have to follow to stay in good standing with the loan. And those rules are right here. The first rule, which we talked about is that it's an owner-occupied loan. So you got to occupy the home as your primary residence. Now, sometimes in life, when you get older, some people may end up getting dementia or Alzheimer's. If one borrower leaves the home and one borrower stays in the house, you're in good standing. You're fulfilling your obligation. You're occupying the home. If the last remaining borrower goes into like a skilled nursing facility for more than 12 months, FHA considers the house non-owner occupied. Therefore, the house should be sold or refinanced to get the loan paid off. Now, in some cases, the loved ones, the family members, may bring that loved one home for care. And if that's the case, do it within 12 months of leaving it, and you'll reestablish residency, and the clock will restart. And you're in good standing with the government at that point in time. So the way you would document that is very simple. When you go into a skilled nursing facility, there's usually some inbound paperwork, and when you leave it, there's outbound paperwork. If those two dates are under 12 months and you show that to your servicer, the loan will be in good standing and you have fulfilled your owner occupancy rule. The next big rule is that we kind of talked about this earlier, but after you get a reverse mortgage, you still have to pay your property taxes, homeowners insurance, and HOA fees, or homeowners association dues, if applicable. So this was a big problem in our industry. Like I said, in 2015, all the way back to the beginning of the reverse mortgage, which was the late 80s, you never had to show a dime of income to qualify. And believe me, there was people out there that were getting reverse mortgages that had zero income. And what would happen is, after they ran out of reverse mortgage proceeds, they wouldn't be able to pay these items. And of course, the county would start to foreclose on you. And then, make no mistake about it, long before that, the lender would foreclose before that. So that changed in 2015. Now we make sure that you have enough income, despite not having a monthly mortgage payment, that you can afford these items here, okay? The final rule to stay in good standing with the loan is you got to maintain the home to minimum FHA standards. What that means is this. There's all kinds of rules on HUD's website about what those minimum standards are. But when you get a reverse mortgage, either a purchase or a refinance, an FHA appraiser is inspecting the home, and they're there to do two things. One, to determine the values there. Number two, to make sure the house meets FHA minimum standards. If the appraisal comes in at value and it's as is, you've met those standards. And if you leave the house in that format going forward, you're going to be in good shape. I haven't seen really anybody, at least in my book of business or anybody around me, that's ever gotten into foreclosure due to the maintenance of the home. Most of the homeowners out there are doing all these items and taking care of that. So, you know, it's pretty easy to stay in good standing with a reverse mortgage, but every now and again, people may run into issues. I would say the biggest culprit of our defaults on our loans have nothing to do with any of these. It has to do with occupancy. Is usually due to death. All borrowers pass away. Heirs are not communicating with the servicer. Servicer's going, where's everybody at? Let's begin foreclosure, because we have an asset out there that's sitting there with a loan on it that's deferring interest that we want to make sure we get rectified pretty quickly. So that's usually our default rates are tied to the borrower's dying. So that's how that handles that. We'll go through the app with Crystal. I'll breeze to this and then we'll jump into the app, or after that, the marketing side.
Okay, great.
Okay. All right. So here's the app we talked about. If you guys want to use this app on your phone, feel more than welcome to. The way you search for it is you go to your app store, search Rev4Per. It's right there at the top of the screen, REV, the number 4PUR. All you got to do is put the borrower's ages in there and the purchase price and hit calculate. It'll tell you the down payment and the loan amount. The app, we run it a little bit conservatively. So in some cases, we may be able to give a bigger loan amount, but this will get you in the ballpark. Number two, for married couples, only one spouse needs to be 62 or older. In some cases, we get borrowers where one borrower is 65 or 62 years old, and the other borrower is 58 years old or 55 years old or something of that nature. That is okay. The younger spouse will be protected. However, the loan amount will be based on the youngest spouse, because that's the person that technically should have the longer life expectancy. Unmarried borrowers. All borrowers need to be 62 or older. This could be any combination. Boyfriend, girlfriend, best friends, father, daughter, daughter, son, brother, sister. You can think of any combination. Everybody's got to be over 62 to be protected and live in the house the rest of their life. However, the youngest person in the group will be the factor for the loan amount. And last but not least, 765, 600. And this means two different things in the FHA world. This is the max loan amount for a regular FHA loan. For the reverse home equity conversion mortgage, the FHA product, that is the maximum value that we use to determine our loan amount. So if you qualify for 50%, let's say, based on your age, you're only going to get half of this number. So if you decide to buy a house at $800,000, it doesn't mean your loan amount is going to go to $400,000. It's going to stay half of this number. So this is the maximum value or purchase price that we use to determine our loan amount. FHA just doesn't want to go beyond that. That's where the private sector can come in. So anything about 850 or greater is the private sector. That's where we want to start looking at that product to see if that may be a better situation. This app for your phone does not handle this product. Call us for details on that. It only handles the FHA product. Okay, Crystal, take it away.
Okay, great. So we're not done with the class yet. We just have a couple more things that we want to talk about. And one of these things is, okay, you know, you've taken this class, you've learned about the reverse mortgage, you know what the borrower is and isn't supposed to do, but what does that mean in terms of listings? How will this knowledge get you more listings? Well, we have a couple of software and technology to really help you guys do that. And this is part of what we offer you guys complimentary as thanks for taking our live stream. So the first software is called GoCordum. And GoCordum is a proprietary system that we've actually created on our own. And what GoCordum does is you put in information of an older homeowner that you think may be, a potential client to sell their home and purchase the next one. Well, with GoCordum, they will automatically send them newsletters and letterheads on information that they would like to receive. Topics such as, is right now the best time to sell your home? What you should be aware of with regards to hero loans, cash buyers. And we have taken all the work out of, marketing for you guys. We totally understand you guys wear so many different hats, and you have to be marketers, you have to be salespeople, you have to, also be a real estate agent, and it's difficult. So with one older homeowner that you guys can get to put, you can put 2 or 3. We're not asking you guys to put in like a whole CSV. But if you guys know an older homeowner that's likely to sell, this software will automatically market to them. You don't have to worry about making your own automations, your own content. You'll be able to review all of our materials that we will potentially send out with our system, as well as you'll be able to receive notifications every time you do. So you'll always be in the know, you'll always know what's being sent, and it will always be sent with your name and have your license number on it. So that is GoCordum. Next software we have is Title Pro 24/7. Title Pro 24/7 is a software that allows you guys to select an area geographically of your choice, and you guys will be able to create a list curated to that older homeowner that really, you really need this information regarding a reverse mortgage for purchase. So you'll be able to put in filters such as how much income do they have? Do they have a big house with over 2,000 square feet, less than 2,000 square feet? How old they are? You'll be able to specify, this older homeowner is 62 years or older. So you'll be able to put in all these filters. And then what we usually like to do is we like to put it in our neighborhood. So wherever your neighborhood is, you can specify that, and it'll show you the older homeowners in your neighborhood who may have a big house, who may have a small income, and those are the older homeowners that you should be targeting to. Okay, great. So you know all that. And by the way, Remind is a software that you can also do something very similar, where you can target your zip code or your neighborhood, and it will show you the homeowners that are most likely to sell using their sophisticated automated or artificial intelligence technology. And with all of that, now what we can help you guys with is we'll be able to give you guys access to complimentary marketing materials. Rob, would you like to go to the next slide?
Yep.
Oh, well, before that though, let's talk really quick about our course refresher. Everyone who attends today will be able to have the opportunity to access our in-depth learning course refresher, because we know this was only an hour-long presentation. We know that it's so hard to remember everything, even with the PowerPoint. I want to hear Rob and Ryan talk about it again. You can do that with our course refresher. We've created this to go in depth in information, and you can access this information at any time and any place, because you'll be able to go to our website, which is one of 2 logins that we will complimentary offer to you guys. Now, everyone who's attended today will be able to get these logins, but unfortunately, without your guys' email at the very least, we have no idea where to send these logins to. So when you guys give us your email, we will be giving you guys complimentary. These are free logins. First is to our website, thereverseeducators.com. With reverseeducators.com, you'll be able to access downloadable marketing materials where you'll be able to put in your information, your headshots, and even your branding. And you'll be able to access our course refresher as well. Also on our website, we have videos and tutorials. Rob, do you want to go to the next slide now? Videos and tutorials on Title Pro 24/7 and Remind, so those softwares that we just talked about. And these are, we preview you guys the newsletters that we have. And again, these newsletters are tailored to that older homeowner that really is looking to sell. And we've written this information, within minds that this is what an older homeowner, will want to hear if they're in the market of selling their home. So you'll be able to get all of these access with the reverseeducators.com login. Second login is your access to Title Pro 24/7. Title Pro 27 is that software where you guys will be able to curate that list of older homeowners right in your farm that have the potential to buy and sell. And we have a tutorial for you guys. So we're not just throwing you guys a software and be like, all right, here's the software, good luck, have fun. No, we want to walk you guys through it. So when you get access to our website and Title Pro, you'll be able to open up Title Pro, open up the tutorial side by side, and just walk with us on how you guys, you're able to curate your list and then find those older homeowners in your neighborhood. So again, these complimentary logins, we are more than happy to get these to you guys. But of course, we need to know where to send them to. So same thing with the PowerPoint and the Amazon gift card giveaway. You guys can feel free to email me right now, and we'll get you these logins after the class, or and we're able to get you in that Amazon gift card giveaway as well. Or you can put them in the chat. You can just send it privately to me. You can just click on my name, and then you'll be able to send me your email privately, and I'll go ahead and put you guys in that Amazon gift card giveaway, which right now it is 12:01. So definitely I want to kind of last minute get you guys into this giveaway. And then meanwhile, while I'm receiving the last minute emails, I'm going to turn it over to Robert again for some closing statements, and then we'll go over some questions, and then we'll do the giveaway.
Cool. Yeah, so like Crystal was saying, those those newsletters that we have, they're all geared to help an older homeowner get motivated to list. Like it talks about Prop 60, Prop 90, which is always important to them as far as transferring their property tax base. So they're all geared toward things around selling a home. So, and we found out, the best thing to put inside of Go Courtum are those people that you already have some sort of a relationship with. So that way they're getting these newsletters from you, and it really comes across very well. And you're able to follow up with them on these newsletters to see what they thought and generate some conversation about potentially listing their home. So really cool stuff. And also too, those Title Pro 24/7 lists that you can generate through our tutorials in the software, we've also found it's very beneficial to do smaller segments of lists. Maybe do like 10 to 20 houses that really meet a specific criteria that's older homeowner that probably could list due to income issues and things like that. And then go drive the neighborhoods and do some reconnaissance on the houses themselves to get an idea. Are the houses dilapidated? Is there something going on there that, hey, they probably got to list their house at some point? So being very laser beam targeted toward these customers with your messaging is so crucial. And just, when it comes to all this information about the reverse purchase and reverse mortgage, the idea is to give you a nice holistic view of it, to have enough information to be able to be a value add to your customer. Because that, in my industry, I found it very beneficial, especially with older homeowners, to know more than just my product. I want to know about trusts and Medicare and Medicaid and Prop 60, Prop 90, and all these things that are important to them. So that way I am a value add. And I also can point them in the direction of other professionals who can handle those areas like yourselves as realtors, right? So very important to build those relationships up and be a service to your customers, especially our retired homeowners. How you looking, Crystal, on the drawing there?
Yeah, I'm doing well. Rob, what do you think you want to do? Should we do the drawing first and then answer questions, or?
I'll answer. If you still have time to get the drawing set up, I can take some questions.
Yeah, let's go ahead and do that. And guys, it's not too late. Remember, the drawing is just part of it. We really want to get this complimentary information and logins to you guys. It's really going to help benefit your business. So go ahead and send me your email, and then in the meantime, let's go ahead and answer the questions. So the first question we have is from Yoon, and he asks, would sellers prefer to sell to buyers with regular loan pre-approvals?
Oh, great question. Well, there are listing agents that have gotten an offer that I've been a part of where there's a reverse mortgage for purchase in place on the RPA, and they sometimes they call me and go, how does this work? I don't get it. And I always recommend that, by the way, to anybody who's writing an offer using a reverse purchase. Advise and tell the listing agent to call me or call Ryan or whoever's doing the loan, because a lot of, like I said, a lot of realtors haven't heard of the reverse purchase and they get a little confused. But usually when I'm done having that conversation with the realtor, that's the listing agent on the house that your customer's buying, they're like, oh, okay. So this customer's putting down a substantial down payment, and these loans are pretty easy to qualify in terms of Social Security and you know, maybe a less than perfect credit score. And they usually like that idea. These offers are very solid, in other words. So I haven't lost or let's put it this way, a real estate agent hasn't lost an offer that was submitted due to it being a reverse, because they didn't understand the product. Usually just a quick conversation and they go, oh, I get it. Down payment loan, just like a regular loan, except they're putting more down than like 20%, right? So that does come up. And obviously the best way to combat that is to speak directly with the listing agent to myself, so we can get that done.
Great. Next question from Alin. Are there licensing requirements to offer a reverse mortgage to prospects?
Yes, you have to have an NMLS license to do these loans. There's no like reverse mortgage specific license that you have to have. However, these loans, you know, they take some time to really understand the ins and outs of them. They're tedious in the aspect that you have to hit certain milestones to get one completed. I've had situations where I've gotten a call from an agent that had their regular forward loan officer do or try to do a reverse mortgage, and they actually did it on a regular forward mortgage application. That's not how these loans are done at all. They have to hit certain milestones, and at the end of the day, they were unable to get the loan closed, and I had to take over halfway through the transaction to get it done. So these loans, they take every bit of my 15 years experience to get these things done smoothly. Let's put it that way.
That's for sure. All right, thank you, Rob. John has a question. What is the current turnaround from application to funding, and how long of an escrow do we need?
Oh, great question. So if I have the opportunity to meet with the client, pre-approve, get them through counseling, we can do this on a 45-day escrow, no problem. I can do it in 30, but I definitely need to have all that stuff factored and dealt with up front before they even get into escrow.
All right, great. Next question from Virginia is, what banker and mortgage company should we work with?
Well, I mean, obviously there are many types of reverse mortgage companies out there. We do the reverse mortgage at our offices here. So like I said, I literally do these loans day in and day out. I would say if you're working with anybody, make sure they have the experience in this industry. They're going to continue to be around for the long haul, and they're working from a point of view of education more than selling the loan. Because like I said, that's really the issue in the industry, is that our borrowers out there that are looking into these loans don't get the proper education on how the product works. And that's where it really, you know, gets strong with the customer, once they really understand the product and what they can do with this thing.
All right, great. Nanette asked, is an appraiser ordered to come back to assess for whatever reason when the house is sold, and who pays for the appraiser?
Okay, so once you've gotten your loan and you've gotten into your house with the reverse, there's nobody that ever comes out and reassesses the value of the home. Literally, you can get a reverse mortgage on day one, and day two, the housing market can crash, and you're still living in that house with your loan, not being required to make a monthly mortgage payment. The house will never get reassessed in terms of value by the county or an appraiser for the reverse, nothing. It's just basically, you get the loan, you have it, no monthly mortgage payments. And if the house ends up being underwater due to the market never recovering, well, then FHA is holding the bag at that point in time. And that's the gamble they take. That's why there's insurance on these loans.
Yeah. All right, great. And then Brian has a question. What if the property is in a living trust and there is still plenty of equity left in the property when borrower is deceased? Can the heirs refinance and keep the property?
Absolutely. Yeah, absolutely.
Okay. Great, for sure. And then Alexandra has a question. What if an owner is in default but has equity and is thinking of doing a reverse mortgage?
Oh, good question. Okay, so they're in default. This is where we want to focus on what caused them to get into default. So that's where we'd start to talk to the customer and find out what hardship provoked the default. And like I said earlier, more times than not, they usually have a pretty compelling story as to why they got into trouble. And as long as we can write a letter of explanation outlining the hardship and have some supporting documentation to support that letter of explanation, we can overcome any kind of defaults on the mortgage. If for some reason we're unable to overcome it, like the borrower's like, I got into default because I just decided not to pay my mortgage payment, even though I could afford it, then that could be an issue. They have no valid reason. So that in that case, we would, they can still get the loan, but we will implement what's called a LESA, L-E-S-A, life expectancy set aside. In other words, we say, look, you need to have money set aside for us to pay your taxes and insurance for you, because we don't trust the fact that you're going to do it yourself. So that'll either result in a lower loan amount or a bigger down payment.
Okay, great. And then Nana has another question. How long do heirs have to keep the home with a reverse mortgage? Is it a year? Since it's a year, owner is not living there anymore. And then after that, do they have option to extend? And how long and how many times can they extend, especially during this COVID pandemic?
Oh, well, I don't know how COVID would play a role on that, but I will tell you this. So you get 6 months right out the gate after all the borrowers have passed away on the loan. So the heirs have 6 months to figure out what they want to do with the house. If they can't figure it out in 6 months, in other words, they haven't decided whether they want to refinance or sell the home, or maybe they decided to sell the home and the house isn't market ready, they can file for a 3-month extension, and they can do that up to 2 times. So that means that you have 6 months and then 2 3-month extensions available to you, totaling 1 year's time. If you can't get it done in 1 year's time, the servicers have the option at that point in time to begin foreclosure proceedings.
Okay, great. And then 2 more questions left. Brian has a question on if the heirs to a property are senior citizens, can they assume the loan and continue with it?
These loans are not assumable. So if someone's of age to get a reverse, they'll have to pay it off with another reverse or another loan to get into that house.
Okay, and then last question from Brian. Does the reverse banker have a broker list for selling their assets after the property goes to the lender? How do we get on the list for preferred brokers?
Oh, you're talking as far as like an REO? I wouldn't know that. You'd have to do some research on that to find out how you can get on a list with a servicer of those loans. I have no idea.
Okay. All right. Well, that's all the questions we have. So let's go ahead and do the Amazon gift card giveaway right now.
Okay.
So let me go ahead and share my screen right here. I'm going to stop yours. And then, Rob, you see my screen?
Yep.
All right. So we're going to go ahead and spin right now.
Who's it going to be? Cynthia Home.
Congratulations.
I love that.
All right. Congratulations, Cynthia. You are our $25 Amazon gift card giveaway winner. We'll go ahead and get that sent to you either today or tomorrow. We're pretty much done with the presentation, and I think West San Gabriel Valley Association of Realtors has some final remarks.
Thank you so much. Thank you, Robert and
You're
Krishna.
welcome.
This is so wonderful and informative presentation. We get a lot of info and know how to get into more detail for reverse mortgage, not only for you and also for me and for our clients. And We want to thank again and for your generosity for the gift cards. If you want to have more gift card lucky draw, join tomorrow Emirates breakfast meeting at 9 a.m. We have Angelica from City of Rosemead come to present to you ADU and Rosemead planning update. In another exciting and wonderful event, hope Robert and Crystal, you can also join. It's a global information. We have our Global Business Council present you Global GBC number 6, Taiwan, today's real estate market trend. And we also have very generosity gift card, $25, maybe 2 or 3 for all the lucky winners. We thank you so much again, Robert and Crystal. And we see you soon. And everybody join tomorrow, 9 a.m. and Friday, 5 p.m. Thank you.
Thank
All
you.
right, thank you so much.